Slovakia, the country with wine so delicious that you can't help but toast every single moment. Villages so open and welcoming that you feel right at home. And autumn days so picturesque that every walk becomes a work of art. Slovakia.
Hello everyone. We will start our second panel discussion a little bit differently with a recorded video from Branislav Labodnik, project manager at Finas. It's a very important work he have done, a written report, written paper, as well as this recording. So we start with the recording, then I will introduce our panel, our topic, and of course our sponsors that enable this event. But first the video.
Good morning, everyone, and thank you for being here. Let me start with a thought experiment. Imagine a world where your bank, your investment, and even your insurance are no longer just institutions, but digital ecosystem powered by AI, blockchain, and cloud computing. The future isn't a decade away; it's already here, and in Central Europe, it's moving faster than many expected. The Visegrad region, Poland, Czechia, Slovakia, and Hungary is often called a bridge between West and East. But it's more than that. The V4 is shaping its own fintech models, driven by local regulation, entrepreneurial energy, and cross-border collaboration. These raise a question for us. How exactly is this happening? Which fintechs are leading, which are booming, and where are the roadblocks? That's why inspired the V4 Fintech Report to be created. Our goal was simple, to map this ecosystem, looking at regulation and compliance on one side and market trends and growth potential to the others. Together they give us not just today's picture, but a sense of where the V4 Fintech story is heading. Before diving into the result, let me explain how we built this report. We used 3 layers of research. There's audit, we mapped studies, report, and regulation. We did survey. We surveyed 145 fintech firms, which covered around 60% of the market. We did interviews with founders, investors, regulators, and tech partners. We also applied the business model canvas and framed everything in the wider EU context. So what you see today isn't just numbers, it's data combined with stories showing how fintechs is evolving, what challenges it faces, and where opportunity lies. Let's move to the legal landscape of V4 fintech companies. The V4 region sits between Western Europe and fast-growing CEE markets with strong EU alignment. But regulatory fragmentation and uneven innovation support still hold it back. Strong includes supervisors, sandboxes, and expanding digital banking in Poland, Hungary, and Slovakia. Weaknesses remain high entry barriers, compliance licensing, and limited venture capital. Opportunities lies in MACA, AA, AI, ACG, fintech, and regional integration. Yet threats such as talent migration, cybersecurity risks, and competition from agile hubs like the Baltics still remains. In short, the V4 offers great potential, but success depends on careful navigation of both opportunity and risks. So far, we've seen the legal foundation of V4 fintechs. But what about future readiness? That's where digital compliance and hotspots like AI Open Finance, MICA, and DORA come in, areas where timing will decide the winners. All 4 countries follow EU rules, but readiness differs. Poland leans in supervisory tech and cybersecurity. Czechia builds strong legal resilience early. Hungary runs AI pilots in its sandbox. And Slovakia is steadily catching up. Key areas to watch are AA, MICA, DORA, and Open Finance. Poland and Hungary are already testing AI, while Czechia and Slovakia have codified MICA, giving them a head start. The takeaway is simple. Speed matters. Those who adapt quickly will attract investments and innovation, while slower movers risk falling behind agile peers like the Baltics or Ireland. When we put all it together in SWOT overview, we see the big picture. Strength, robust supervisory frameworks, active innovation hubs, and sandboxes that allow fintechs to test new ideas. Poland, Hungary, and Slovakia in particular are developing strong digital banking ecosystems. Weakness, high entry barriers, complex licensing requirements, and limited venture capital in some countries. Opportunity, MICA adoption, AI-driven solution, SEG-focused fintech innovation, and cross-border integration. Threats, brain drain, cybersecurity risk, and competition from more agile fintech hub in Europe. In short, the V4 has strong foundations, but fully unlocking its potential requiring coordinated and regulatory effort and continued investment in innovation and talent. Let's move to the economic landscape of mapping the V4 fintech landscape. In V4, fintech ecosystem reflects both shared trends and national specifics. Poland leans its scale, especially in digital banking payment. The Czech Republic is smaller but highly mature, specializing in alternative financing and tokenization. Slovakia is small but surprisingly diverse, strong in AI and tech-driven services. Hungary is payments heavy but branching into cybersecurity, emergency, and tech. Together, this creates a diversity and complementarity and opportunity for cross-border growth. So what does the picture show? Payments and banking remains the backbones, but AI and data-driven services are gaining grounds, pointing to a strategy shift towards intelligence-based solutions. In short, the region is both diverse and complementary. Poland and Czechia bring maturity and scale, while Hungary and Slovakia bring agility and fresh dynamism. Together, this creates a resilient and competitive ecosystem. Now, let's take a closer look at our fintech sample. Most companies are still early stage, especially in Slovakia and Hungary. Revenue show a dual track. Many ventures remain small, under €500,000, but the growing group is scaling up toward €10 million. Profitability is mixed. 20% are loss-making, which is natural for startups, but over a third are already generating meaningful profits. Growth patterns are polarized. About half are growing steadily, and a smaller but important group is scaling at 75% or more per year. The message is clear. This is a dynamic ecosystem. Early-stage innovation dominates, but scale-ups are proving that fintechs in V4 is not viable. It's resilient. When we are talking about company developed stage, the V4 fintech landscape is dynamic across all stages of maturity. About 40% are startups experimenting, testing, and seeking first customers. Another 60% are scaling rapidly, attracting capital and talent. Nearly 37% are already established with proven models and stable revenues. And finally, 7% are corporates, often partnering strategically with banks or insurers. This balance matters. Startup brings innovation, growth firm create jobs, established player interest stability, and corporates bring scale. Together, they form a healthy ecosystem that can sustain both creativity and economic impact. Technology is where V4's fintechs really shine. Nearly 30% use AI, powering smarter analytics, automatization, and personal finance. A quarter rely on advanced database system, and 1/5 use digital platform for scale. Automatization and open banking are modernizing infrastructure, while blockchain is starting to reshape payment and assets. Country differences are fascinating. Slovakia and Hungary lead in AI adoption, while Poland and Czechia are pioneers in blockchain integration. Early pilots in Web3, EOT, and Metaverse show bold experimentation. This diversity positions the V4 as a genuine innovation hub. Employment today. The V4 Fintechs is built on people and mostly on small and agile teams. Over half of all fintechs employ fewer than 50 people. Micro enterprises, often just 2 until 10 staff, are experimenting with AI, blockchain, and digital leading solution. The backbone is formed by small and medium-sized firms, representing more than half of the ecosystem. They are the ones rapidly scaling operation and giving the region an entrepreneurial energy. Only a handful of firms have over 250 employees, and just small of corporate giant anchors the ecosystem. This mix creates both opportunities and challenges, high agility and innovation on one hand, but scaling difficulties and funding barriers on the other. And what are the employment expectations in 2026? Looking ahead to 2026, most fintechs, 58%, expect steady team growth. About a quarter plan significant expansion of 10 until 30, and nearly 1 in 5 predict rapid growth of over 30%, often tied to international moves, new services, or scaling insurtechs. Country pattern differs. Hungary leads in rapid hiring with new startups. Slovakia expects steady growth, Poland focuses on SME expansion, and Czechia grows more cautiously, reflecting maturity. Overall, the region is preparing for a jobs boom. For policymakers, this means investing in skills and talent pipelines. For investors, it's signal momentum. Growth not just in capital, but also in people. When we are talking about banks and fintechs, financing is the lifeblood of fintech. Yet in the V4 region, traditional bank financing is more of a bottleneck than a growth driver. Let's look at how fintech are navigating these challenges. Our survey revealed a striking picture. Nearly half of fintechs say banking financing is out of reach. Only 7% describe bank as truly supportive. This is a strong signal in traditional bank-centric region. Fintechs are forced to think differently. The barriers differ slightly by countries, but the trend is the same. Banks are not yet playing a constructive role in fintech growth. Instead, fintechs are creating alternative financial cultures. Not banks, then who? The V4 Fintech sector is highly investor driven. Venture capital and business angels dominate, while over one-third bootstraps their way forward. This creates a culture more similar to Silicon Valley than traditional Central Europe. Local conditions matter. Slovakia and Czechia are still very bootstrap heavy. Poland has built a more diverse funding culture with EU support. Hungary is betting on partnership with incumbents, showing how different pathways can fuel fintech's growth. So the paradox is clear. Banks which dominate central zero finance are often missing in action for fintechs. But this very gap has forced fintechs to become creative, resilient, and globally minded. For investors and policymakers, this is a chance to leverage the diversity of funding models and support a sector that is already agile by necessity. When we are talking about FIDA, most V4 fintechs, 62% is a current number, see FIDA as a growth accelerator, but 38 remains skeptical, fearing extra admin and weak local capacity to implement. Poland and Hungary are optimistic, focusing opportunity, while Slovakia and Czech Republic are more cautious. This paradox is clear. Open finance has the potential to expand market, but only if regulators provide support, sandboxes, and practical guidelines. And what about the talent in fintechs? Talent is the number one barrier across the V4. A quarter of company face high salary pressures, another quarter can't find qualified people. Brain drain to global hubs and mismatch with education make this even harder. Poland and Hungary feel the salary heat, while Slovakia and the Czech Republic struggle more with education gaps and low local interest. Solving the requires partnership with university, coding schools, and international requirement, otherwise the innovation pipeline will dry up. What about intellectual properties? Fintechs drive on innovation, yet more than a quarter of V4 firms don't protect their intellectual properties at all. Hungary and Poland show stronger use of trademarks, patents, and copyrights, while Slovakia and the Czech Republic lack. As competition grows, intellectual property is no longer optional, it's strategic. Stronger intellectual properties protection builds investor confidence, safeguards innovation, and is critical for scaling across borders. And what about the internationalization of fintechs, in V4 fintechs? Almost half of V4 fintechs are already active internationally, with growth stage and established firms leading this charge. Another quarters are planning to expect soon. Many are even considering relocating headquarters to access larger talent pools, better tax regimes, or more mature regulatory environments. This demonstrates the region's strong growth mindset and ambitions to compete globally, leveraging digitalization and remote-friendly business models. And why go global and what hold them back? V4 Fintech see international market as opportunity for growth, the talent, and strategic diversification. However, scaling abroad isn't easy. The biggest challenge is simple having the right connection. 45% side lack of network as a top barrier. Government support is patchy, and cultural or regulatory hurdles complicate expansion. So, technology is not the problem. Ecosystem and strategic preparation often are. V4 fintechs are increasingly international. Many are in Germany, the UK, France, and EE, with some even reaching the US, UAE, and emerging market in Asia and Latin America. Over 27% of companies have presence outside the V4 region. This flexibility balancing strong local operations with global ambitions shows that V4 fintechs are not just domestic innovators, but increasingly global competitors in digitally connected world. Almost half of V4 fintechs collaborate with academy occasionally, but only a small fraction engage in long-term R&D partnerships. Internships are more common, highlighting the importance of university as a talent pipeline. On the institutional side, collaboration with banks and insurers is uneven. Some partnerships are strong and structured, while many are limited or non-existent. The Czech Republic stands out with better cooperation, while Slovakia sees more independent fintech growth. Overall, there is a recognition of value, but real engagement is still maturing. When we are talking about inter-fintech collaboration, collaboration among fintech themselves is growing. About a third have established partnerships and nearly half are planning new alliances. Poland and Hungary focus on the cross-border initiative, while Slovakia and the Czech Republic have more mature networks in payment and insurtech. This shows that fintechs are increasingly leveraging collaboration to accelerate innovation, share expertise, and co-develop solutions. But independence remains a viable strategy for some, showing the ecosystem can support both cooperative and standalone approaches. Partnership with traditional financial organizations. The trend in the V4 is moving from pure disruption towards strategic cooperation. Almost half of fintechs now partner with bank, insurance, and payment providers, gaining access to consumer distribution channel and creditability. Poland and Hungary leads with active structured partnerships supported by accelerators and innovation programs. Slovakia and the Czech Republic have independent fintechs, but the overall trends point to greater integration. What are the barriers slowing fintech's growth in the V4? The survey highlights the top barriers that V4 fintechs face. Financing is the most pressuring challenge, especially for early stage startups seeking venture capital or investors. Regulatory complexity is the second biggest constraint, with unclear rules and high compliance costs slowing innovation. Talent shortage, particularly in software development, data analytics, and also cybersecurity, directly limit the ability to scale. Small market also make customer acquisition a challenge. Only 2% of respondents reports facing no significant obstacles, showing that the most fintechs must navigate multiple barriers simultaneously. While financing is generally the top concern, each country faces unique challenges. Hungary struggles most with regulation and talent gaps. Slovakia is constrained by a small market size and scaling independently. Poland deals with both financing and regulatory hurdles, whereas the Czech Republic benefits from better access to digital but still face regulatory and talent pressures. Understanding these nuances is essential for target policy or investment interventions. And what are the opportunities for growth despite challenges? Despite these challenges, the V4 fintech ecosystem shows strong growth potential. Governments, incubators, and accelerators are increasingly supporting innovation through grants, pilot initiatives. Simplifying regulation, closing talent gaps, and improving access to capital are critical levers. If addressed effectively, these interventions could unlock the next wave of fintech's growth across the region. In short, financing, regulation, talent, and market scale are the main barriers, but with coordinated efforts, the ecosystem can thrive. Today, we've seen that the V4 Fintech ecosystem is diverse, dynamic, and increasingly interconnected. Despite barriers, financing, regulation, talent, the region's fintechs are innovative, ambitious, and ready to scale internationally. Success will depend not only on technology, but also on collaboration across country between fintechs and traditional institutions, and also with academia. By addressing structural challenges and leveraging opportunities like open finance, sandboxes, and cross-border partnership, the V4 Fintech ecosystem is poised to become a global player. In conclusion, the V4 region has the potential to become a dynamic hub for fintech innovation. With concerted effort in collaboration, regulation, and talent development, the path forward is promising. Thank you very much for your attention.
Hello. I would like to welcome you to the second panel. And it's an honor to be here again at the Finweek in Bratislava, the 9th Finweek 2025. And I will moderate today's flagship panel, which will bring together fintech leaders, regulators, innovators, policymakers from Central Europe, ASEAN countries, and beyond. Before we continue, I would like to thank our partners who make this event possible. Thank you to our main partners, Ministry of Finance of the Slovak Republic, National Bank of Slovakia, and Visa. And I would like to special thanks to our conference partners, Slovakia Travel, Embassy of Poland in Bratislava, CRIF, Slovak Credit Bureau, DECTA, Golden Gate, Blick, DevOps Group, Fumbi, Bratislava Stock Exchange, TPA Slovensko, Prosper and Pavlovic, University of Economics in Bratislava, and Matej Bell University in Banska Bystrica. We also thank our AI stream partners, TechMates, and our official networking partner, IDEA. A big thank you to all our supporters and media partners. Today's program is packed with groundbreaking discussions from Digital Euro, CBDCs, to the first ever presentation of the Central Europe's joint fintech strategy and sandbox initiatives, Fintech Valley Europe. And for our panel, we will have the Fintech Powerhouse, CEE and ASEAN, from regional integration to global bridges. In fact, Central Europe, as a region, is a large enough player. Individual countries might be small. Bratislava is an excellent location in between Poland, Austria, Czech Republic, Hungary, not to be forgotten. And I would like to invite our panelists up to the stage. We have Simona Michalíková from Czech Republic, head of the Regulatory Sandbox Department, Czech Invest. Chris Lowe from Hong Kong. And now yes, Regional Director, Europe for Central Asia and Israel, Hong Kong Trade Development Council, HKTDC. Dr. Alexander Titov, co-founder and Deputy Secretary General, International Digital Economies Association, IDEA. Dr. Andreas Rung, board member, Hungarian Fintech Association. Jan Ziomek, partner, head of Fintech New Tech Group. And David Achberger, partner of Finas. And I also would like to promote Finweek 2026 in Kuala Lumpur in Malaysia. It will take place in June in Malaysia, in Kuala Lumpur. So this is just an example how Finweek and Finas is building bridges to the ASEAN countries by having events also in Asia. We have a lot to learn from each other. And when we're successful developing the Fintech Valley in Central Europe with a sandbox environment for not only testing regulatory environment, but also testing tech, innovation, and customer adoption, this is the goal of Finas, and that's why we have this panel discussion here now. I hope I didn't miss anything important in the introduction. If I did, you have a chance to add it when we start the discussion. Yes, you're online. Perfect. Very good. We will start with the opening questions. And the opening question is the CEE Digital Sandbox. We start with the Visegrad 4 Sandbox. We'll expand to the CEE Digital Sandbox. So let's talk about the CEE Digital Sandbox. What are the most significant practical opportunities? And what are the real barriers? How do we ensure it accelerates innovation, not just compliance? So that is our big opening question. And since I received information about what different speakers would like to speak about, this first question goes straight to Andreas Rung, because you were showing interest in this question before the event takes place. And Andreas Rung, as the founder and CEO of Ergomania and board member of Hungarian Fintech Association, and they help banks and fintechs in Europe and Asia to raise their design maturity and deliver next generation digital experiences.
Hello, thank you very much. My thinking about the sandbox necessity, so not necessarily from the regulatory or the legal perspective, that it's very essential to develop this type of solutions that when we are talking about entering in a new market, it's quite critical to find a market fit, and we are talking about this a lot, but what we are not highlighting quite often is also that when we are launching new products, we never do it right for the first time. So it's very hard to invest a lot of money into a solution what might be wrong or partially wrong. So in product development, for example, it's very important, the iterational cycle, that you iterate, you change your product, you improve it continuously. And in that case, if you have a sandbox and not just the small countries are fighting or struggling individually, but it's like more joint cooperative, you support this iteration, what is kind of very critical component of innovation. And in product design, it's a very essential part to iterate and get feedback on time from real users. Because even if you are using like standard product development methodologies, user testing, observation, any type of research, it's just research methodology. So you have to see it in live, but experiment with low cost. So for this reason, I think it's also very critical.
Thank you. Anybody would like to follow up on this introduction, or you can do your own introduction?
So maybe a little bit more, because I have a little bit different experience, because I worked for over 6 years in the Polish FCA, and my job was to help to enter the market for example, the new solutions, new companies. And what you highlighted, and what is one of the most important barrier for the entering the market, is that we are not unified in the meaning of services. We as the countries have different understanding what services we would like to use, how it should look like. So, for example, PSD2 is one of the best examples that, of course, we have PSD2, we have, in theory, standardized API, but at the end of the day, every country have its own standard, more or less. Even not only the country, even the market players have their own API standard. And this is the problem that on which we should work. So to unify the solutions as much as, of course, as it is possible to create some kind of standard of services to make easier to enter the market for the market participants.
So what is the main showstopper, as you see it, for a unified API?
For the unified API, so that even in the aspect of PSD2, if you are compliant, for example, with the API in Poland or in Germany, it's not so easy to just switch to Czech Republic or Slovakia, because first you would have to check whether there are no discrepancies between what you have already and what should be. So, for example, this is one of the problems that it's not so convenient for everybody to change the market, to go with his tools, with his services to other jurisdictions.
Thank you. Anybody wants to follow up again on this question before we continue? And if not, I will have a yes, please.
Hello. Maybe I will just add that we do have a sandbox in Czech Republic. I'm sure about it. And also about the heavy requirements for licensing, and this is costly in Czech Republic. I'm not sure. It's not a question probably for me, but maybe the conclusion is that we have the most applications for MiCA license in Europe so far. And the CEE Digital Sandbox. It's a concept. I do see the point of the CEE Digital Sandbox, but it's really important to have a sandbox in each country, and it is a long shot for me. There are some problems. For me, it's a transfer of the responsibility of each national regulator when you share this project. It's really important to not have just the regulatory testing. That's what we do in the Czech Republic. We do have the regulatory testing, the technical testing, and also the mentoring. Under the first part, it's hidden in just any problem the fintech have. And also, what we can do, I think also here in Slovakia and also in the Czech Republic, the National Bank have a fintech contact point where it's easy to ask a question and to receive a response for your problem. So maybe that's a summary that it's a really great idea to have a CEE sandbox, but probably we need to define the key points, whether it's possible, on which it's possible to cooperate between these countries, because it's really not an easy question how to cooperate between different nationalities and regulators and etc. But it's really definitely interesting idea.
Okay, so from the regulatory point of view, what we really focus on here is the ASEAN Bridge and the CEE Digital Sandbox. I will go over to our guest from a little bit further away, Chris Lowe from Hong Kong, but currently based in Frankfurt am Main, if I've got that one right. He's the regional director for Central Asia Israel Hong Kong Trade Development Council. So when it comes to building bridges, I hope we're talking to a bridge builder here or architect.
Thank you, Johan. I think you're absolutely right. We're here, to share about the concept of bridges. What I do actually representing the Hong Kong Trade Development Council, we are exactly trying to build bridge between Hong Kong and the world. So for a lot of reasons, we are the interface of the key stakeholders within the framework of the fintech environment or the fintech businesses. So that also includes a lot of startups and corporates, banks, regulators, investors, but also by and large a lot of the end users. I mean, just a sort of a landscape to share. Perhaps we can also look into the CEE sandbox we talked about earlier. I think Hong Kong is blessed with an environment for a lot of reasons to be innovative, to also have a chance to access to the capital and also user cases. So that actually gives Hong Kong a good advantage to start with a lot of entrepreneurship, I would put it that way. The concept of sandbox also exists in Hong Kong, just as an example, but it's not only limited to Hong Kong, because I think there are some similarities between Hong Kong and different countries here. We talk about the V4 here. I mean, collectively, actually, it's quite a sizable market, and in Hong Kong, we have some 7.5 million of people. So we don't have enough domestic market, so to say, for these startups to grow, for these fintech to be successful. The sandbox concept actually works for our different regulators, but also for the corporates as well. So from the public side, how we define is based on the approach of different regulators, focusing on banking services, securities, insurance, wealth management, and so on. So there are different sandboxes focusing on different kind of verticals or different applications. Perhaps that could also be food for thought for CEE regions here to look into the division of neighbor or the kind of specialities of different countries, as mentioned in the report earlier. Which country is doing perhaps in different way to help each other to build up this sandbox environment to test. And then from the corporate level, of course, there are a lot of banks and corporations who enable within an environment for startups to test, to run private solutions. So that would also help. But I feel like we from Asia has a lot also to share, but to learn from this part of the world as well. So I think the bridge concept is what I agree, and I hope I can contribute to this panel as well.
So far, so good. Very good. I like your opening statement. And we will move on with David Achberger from Finas, since you will also be part of the bridge building and are heavily involved in integration and innovation.
Let's say that. I'm a little bit later addition to this panel, so I'm really glad I can sit with all the professionals here. Basically, as you saw at the beginning, I had a really small introduction there, just partner of Finas. But what I do professionally, I'm a strategic advisor and consultant to the mostly fintech companies in Slovakia, but I'm also a startup founder. So from my perspective, I will be talking from the perspective of a founder and somebody that is working with the executive team on developing the strategies, how to get in market and do the fundraising. I also worked several years in Web3 and crypto and blockchain space on the side of fundraising, and I can say really what the founders need at the start is to help them, mostly in Europe, because Europe is a bureaucratic, let's say, I don't want some bureaucratic problem there with everything and a lot of regulations. And founders, there are people from sales or tech. They just want to get the product rolling, and they need all the help they can get, of course. So when David told me about the opportunity to build this V4 Sandbox, it was like really straightforward, and I was really glad that I could contribute somehow or to bring this together, because I see Europe needs to compete much more in the wide range of, let's say, on the world stage regarding their products. We see when it comes to the building something in digital space and fintechs, everybody goes to US or Asia, of course, because first it's regulations, second it's investments, and also the networking. When you launch a product in the US, you have a 350 million market, right, on your doorstep. It's much easier to get money in San Francisco than in Europe, of course. So I think this makes sense to build something that can help the founders at the beginning, really the early stage, the startups, and to build this kind of basic structure they can work on and open these markets to them, because it's much easier to start in 4 markets straight away and get the feedback of the customers and the users than to start in one small Slovak market. It's similar as you said, Chris, in Hong Kong you have 7.5 million, we have 5.5, and it would be much better for the founder to test this product in environment of Hungary, Poland, also Czech and Slovakia altogether. So ultimately, the burden is on the, let's say, regulatory structure from the starter, because we have some differences there. But really, the positives or the pluses that can this sandbox bring are infinite when we look at the broader application.
Good, thank you. We'll go over to Alexander Titov, who is working with internationalization at IDEA. And are you one of our bridge builders as well?
Hello. Can you hear me well?
We hear you good.
Very good. I wish I've been with you there, but hello from the Philippines anyway. And you are right. Now we're speaking not about only interregional bridge builders. We are speaking about more global technology ecosystems. And what we're doing in IDEA, International Digital Economies Association, is exactly that. So we put together the global digital economy leaders from emerging markets of so-called global majority regions, starting from South America, Africa, South Asia, and of course ASEAN. So today we speak in particular about ASEAN. And my personal professional story actually related to the bridge between Central Europe and ASEAN, because I was educated in Hungary, got my PhD there, and was working actually for digital success program of Hungary a few years ago. And after that, I got my exposure to ASEAN region, because I think the most exciting things in fintech and digital economy now happening here, and I will show you why. So as previous speakers were mentioning, that even Central European region is diverse between several countries consisting in the region. ASEAN is even more diverse. And we have now 11 member states. Yesterday, I think it was official ASEAN summit in KL in Malaysia, and it welcomed Timor-Leste as a new member state. But when we speak about the target markets for the companies, for the technology innovators and providers, of course, we would more focus on largest countries as Indonesia, Philippines, of course, Malaysia. Singapore is standing out a little bit, as we say, it's like a global hub. And we also pay attention for emerging region as Cambodia, Laos, Myanmar, Thailand, and Vietnam, of course. And good to mention that our association is headquartered in Hong Kong. So Hong Kong is also serving like a global hub, connecting and gathering together digital economies of ASEAN countries, because it's really close and reachable, and from Hong Kong is easy to make business with all over the world stakeholders. So now what we have in ASEAN, it's a market of 600 million people. So imagine that, 3 times more than population of Central and Eastern Europe, and 400 million of them are digital consumers. So very highly mobile first, high penetration and adoption of digital technologies. All of those countries are characterized by that. Moreover, it's very young market. So the average age of population is 25, 27 years old in comparison to Europe, where average is above 40, sometimes 45 years. So you will be already thinking and strategizing how to direct your products, services, and technologies towards more younger, more like Gen Z population, very highly occupied with online activities, social media, e-commerce, because e-commerce is huge as well. And also the use of and rise of super apps as Grab, Gcash, Gojek across ASEAN region. The total size of digital economy now, it's about 263 billions in last year, and it's growing like 15% every year. And by the next decade, it's expected to be achieve like $1 trillion. Okay, so I think it's exciting enough, but I would like to say that also there are disparities in regulation. For example, like it was already mentioned, sometimes in Europe there are over obsession, or maybe it's in a good way, proper diligence with regulation, which is not always exist in ASEAN landscape. There is also diverse infrastructure in relation to digital public infrastructure and e-government services. There are certain well-known issues with cybersecurity and fraud prevention, which is also opens more opportunity for European companies to bring their expertise. And we can see more and more players from Poland, Czech Republic, and Hungary, for instance, appearing here in the market. And of course, nevertheless, based on my experience and my personal business practice, the communication and cultural aspect is really crucial. So in how we understand each other with the stakeholders from Asia and from Europe, and sometimes it's really different, starting with sending emails, or for example, use more messengers and social networks for communication, which is pretty normal and applied in business here. So we have successful use cases of projects and cooperation between Europe and ASEAN countries. We have partnership with Luxembourg. Our board members come from Germany, Spain, Norway. We have members from Norway, Hungary, and of course, Slovakia. And thank you for an invitation, by the way. So I think for now it's okay. And for the next version, I can show you where we can earn money together in that region for fintechs. Thank you.
Perfect. Great to have you on board. We'll continue from compliance to experience, turning regulatory pressure into innovation via design. Design maturity as a growth multiplier, while user experience is essential for scaling from the CEE to ASEAN. CEE and ASEAN fintechs will only reach global relevance by connecting regulatory agility with design maturity, transforming compliance, user trust, and digital ecosystems into unified strategic advantage. This comment and follow-up is for you, Andras.
Okay, thank you. I think, for example, like the regulatory pressure, for example, what we have seen in Hungary, that in some cases it can be very beneficial because in some cases the local financial players are a bit lazy. So if you get a little push about implementing good practices and good techniques, it's kind of essential. So for example, in Hungary, we have seen that the Hungarian National Bank was promoting some good practices regarding how to innovate and how to do product development, had a good effect on the market, even if the banks, they were acting that they were not very happy about that the Hungarian National Bank is mixing up with some things, but they felt that their own territory, but it was helpful for the overall market. So this is my take on this topic. I would add to the former topic one comment that when we are talking about the region like Central Europe and Asian cooperation, I think what is essential that the Central European companies have to understand that it's a long process. So the problem is what I see that, for example, in the cooperation, I see more from Europe to Asia side because we are involved in that the companies are a little bit impatient from two perspectives because they are not very strong on funding. They expect quick results because they will run out of money. So if they want to invest in a long-term relationship, they know that they don't have money for 5-10 years, what kind of essential to have success in a long-term cooperation. And the other thing, what I think Central European companies, they have to change in attitude, but there is a promise for that they are more interested about the business opportunities than the culture. And I think in the region it's quite essential that it's easier to do business with people in all cultures, but especially in this region, that if you show like a genuine interest in that culture and you show the respect. So I think it's very essential in this cooperation that it would not be technical and too much success-oriented, but it would focus more on developing long-lasting real relationships.
Thank you. We'll move over to Jan and the Polish perspective. And being from Poland, that is the largest economy in the region after all. And we've got quite far in this area, so it's great to have you in the CEE folder, and hopefully we can build something from this. What is your comment regarding regulatory environment as a driver for innovation and expansion across borders, including the ASEAN countries?
Okay, so we should look at the regulations from two perspectives. So for me as a lawyer, so I will always say that regulation will help because it's building the credibility, for example, that something what is offered for the customer, for the end client, is also some kind of standardized, and we can believe that it is good. Somebody is looking after and let's say assuring that even the partner, your business partner, is verified, is okay.
Just one quick
yes.
there. Will not standardization stifle innovation, except if it is to guaranteeing or doing something just on counterparty risk?
Not necessarily, because standardization means multiple things. It means, for example, from the perspective of technology, it doesn't matter for you whether you use 1, 2, or 3 plugins to take the information from, I don't know, banks or PSPs. It doesn't matter for you. It matters on the level that you have to build your IT and pay for 1 or 2 or 5 updates that you have to do with the IT. This is the problem, that we are focusing not only about the standardization as a technical part, because this is the one thing. Other thing is the regulatory standardization. We know that there is PSD2, there is MiCA regulation, multiple, let's say, regulations that are saying, oh, we are standardized. But when you will look, when you will deep dive in the regulation, you will see that in some countries, so we have some specific translation of that regulation, or maybe some condition that needs to be filled before, for example, the authorization for that participant will be given. This is the problem.
That's an EU-wide problem with all EU regulation that are implemented by the local authorities, and it's interpreted differently. And as you mentioned, interesting enough, sometimes pure translation error creates troubles for certain countries.
I wouldn't say that even they are errors. Sometimes I have confidence that they are for the purpose. From my perspective, even you know, if you're looking at this from the perspective of the lawyer, and if you're looking on the regulations, so of course it helps because it builds the credibility. So previously we wouldn't have the eyes, for example, services like we have right now, so access to our data. Nobody will open 10 years back, nobody will give you easy access to your data to use it, for example, in the credit scoring processes, for example. So we are prepared, we are aware that in Europe, regulations are the key factor to develop them in the market. Coming the regulation, and you have the development of the new solutions that arise and want to use this new opportunity. In the ASEAN region, it's something different, because when you're looking at the market, it's like our colleague says, 600 million people around, mostly unbanked. They have the same needs that we have in Europe. So pay for something, be able to, for example, invest the money that they have, maybe small amounts, but millions of people, of customers have that need. So it creates the market. And there it's easier to make the innovation in the meaning to use, for example, personal data to discover what might be good for example, because there is no GDPR. If you're looking at the Europe, one of the problem is GDPR, for example, how to process the data. Right now, AI Act that we didn't mention yet. On the other hand, people are keen to use these services because they know that if anything will happen, they can the company that is processing your data wrongly could be punished for that. So, you know, regulation or not, it always have two faces.
So we can talk about regulation when it comes to compliance and such areas, but also about regulation and standardization of technology. It's two completely different areas and should probably not be confused, I guess. Standardized APIs is one thing, but forcing a standard when it comes to technology, that is what I mean could stifle innovation.
Yes, for example, so access to the data, because we saw on the slides FIDA regulation that will probably come into force.
In the afternoon, we will speak about FIDA.
Yeah, I know it's really interesting because, you know, it expands what we understand as a PSD2 open banking, so it will open for the whole market. But I think that this will be something interesting for the all market participants, because it's no longer banks, no longer PSPs. It's a whole financial market that have to share the data. So we'll see how the standard will be created, and whether we will have one standard or at the end of the day we'll have the same state of play. So every country will have separate, and every market participant will share different data. So this will create kind of opportunity for us.
Thank you. And I will get back to the ASEAN bridge, moving beyond synergies, what are the specific bankable opportunities in AI, blockchains, or payments between CE and ASEAN? And what is the pilot project for Kuala Lumpur 2026 seeming most viable? I think that's for you. For me? Yeah, since you're representing Finas here today.
Yeah, of course. Regarding what we are doing with Finas is really to build this cooperation as we spoke about, and building this fund that can really help bring together also projects from Central Europe to Asia and Asian projects to Central Europe. So it really should bring new opportunities for the founders in both regions, and that's it. I'm not really.
Anybody else would like to follow up on this question? What we can do when it comes to AI, bankable AI, cross-border transactions, CE and ASEAN countries, and what we're lacking today, and what are the gaps to be filled? Well, yes, please, Chris.
Maybe I can just add on a bit, also some comment or suggestions from what we discussed. I think overall we are here to talk about, of course, the bridge, but also about the mindset. Again, I mean, the earlier question talking about the design, the experience, I think from our perspective from Hong Kong, let's say 15 years ago, I mean, there was not many people talking about startups or fintech, because traditionally, I think the Asian kind of families believe that, okay, you have a new generation, you start your business, you have to be successful. So it's not really like the concept that we accept the failure. I think that's the traditional mindset. But of course, I mean, within Hong Kong, it's a very westernized and also international business environment. I think over time, this mindset change, where startups emerged, where they understood that the Silicon Valley story told us that, okay, sometimes we have to accept our failure. We have to learn from what we have not done correctly. So that's not only applying to the startups, but also to investors, to traditional banking, even to a policymaker, I would put it this way. So over the years, now, I mean, we are very comfortable to see Hong Kong having a very vibrant ecosystem in fintech. There are more than 1,100 fintech companies right now in Hong Kong. And very interestingly, they are quite internationally connected, because around 30% of these startups from Hong Kong are actually founded by an entrepreneur outside of Hong Kong. So they come to Hong Kong as a testing bed with an environment to try, because of the market that we mentioned about ASEAN being 300 million, and in mainland China is 1.3 billion of people. So it's actually a lot of consumers who are ready, a lot of companies who are ready to look for innovation. And I think that actually changed the mindset for a lot of, the idea of a bank who now look for innovation, who disrupt their own services. Even policymaker regulators, I think they always avoid risk. They manage the risk. At the same time, they create this kind of sandbox environment, which not only, develop a sort of more transparent framework for startups or for projects to try, but also at the same time, it's actually, for us, a sort of process of communications between the regulators within a framework for, startups or for projects for the banks to try. And within the process, that can be flexible sometimes to adopt or to change. I think that's actually very important to see how this sandbox not just providing an environment to test, but also providing a kind of feedback loop back to the regulators or to the framework to see how innovation can move forward. So again, this is also a mindset change. But going to the question on AI, I think in Asia in particular, we have actually a lot of needs as a market, because it's a big market. And currently, I don't see personally a lot of bridges that have been starting between the V4 Valley here with ASEAN or even with Hong Kong. So I believe there is a huge potential. But the mindset is to see how we start this collaboration, to localize or to adapt, to test the market. We actually have good successes from other regions who have some user cases in Asia, and then they move back to their domestic market and become very successful. that can be one kind of thinking to see, okay, some startups want to start here to have some, user case, to have a proof of concept, and then they expand internationally. But that could also be sometimes not necessarily be this traditional path versus where the opportunities are, where the markets are, and to start from there and coming back perhaps later.
Thank you. We'll continue with Alexander. Please, I would like your comments on the same question and develop it from your perspective.
Yeah, thank you. So how can we build Central and Eastern Europe and ASEAN bridge in next banking generation? And when we speak about technology expansion to the new market or even investment opportunities, the first question is, where is the money? So we already said that the market is huge, potential is tremendous, but where exactly we need to apply our efforts to get faster results? So, and I think this comes to fintech lending opportunities, because in Southeast Asia, nearly, as was mentioned actually by one of the experts, nearly 70% of adult population remain unbanked or underbanked. And this hundreds of millions of people outside of which are left behind or kept outside of formal financial system. And we have more and more foreign and international fintech innovators and players which offering digital credit to underserved consumers who would otherwise have no access to lending at all. So this is the work of fintechs. Then focus should be going to MSME sector, because 99% of all the businesses in ASEAN, 99%, it's SMEs, SME business, small family-owned stores and shops, sari stores. There are different names in different markets for that, but it's a huge also audience for financial services. And therefore, as traditional banking system cannot serve them, there is a phenomenon as online community-based lending. So there are rural banks which are located in provinces, which are serving local communities. And there are also financial cooperatives which play the role and fulfill the function of traditional banks in those areas. So if you are also a player, you should keep it into account that if you are entering the country as Indonesia or Philippines, you don't focus only on capital and urban cities. The market is really outside. And therefore, the relationships, the cultural mindset, they are critical words, what I heard today. It's really important in building your strategy, in penetrating that market. Also, what I want to mention, that the digital assets and crypto use is one of the highest in the world, in particular Philippines and Vietnam markets. So it also opened the opportunity for cross-border payments and remittance payments, because more and more ASEAN citizens, they go to work to Europe, and they need therefore services and payment trails to remit money back to their families. And also I would pay attention for the, as it use-driven market for gaming sector. And there is also high-risk verticals as online gaming and gambling. We cannot ignore that. It's really the huge hub for gaming and gambling in the world, located here in Southeast Asia.
Thank you. From a global context, Silicon Valley and investments, how does this CEE Asian corridor position itself relative to Silicon Valley? Are we competing for capital, talent, or the new models of collaboration? What do you think, Simona?
Yeah, we want to have cooperation with the Asian part. We want to have a Silicon Valley here. It is possible. Definitely. Now? No way. We need to make some first steps to build a strong position. It's definitely needed to be in cooperation with someone. We need to work on the cooperation now. It was said that the steps need to be small. We need to be patient. It's not possible to have a Silicon Valley here and to be competitor for Silicon Valley in 5 years. It's not possible. Not in the CEE region. Maybe if we will really start now with the small steps, with a better process of reaching the new talents, with the visa for talented people, with the data for the companies, and better cooperation between the countries, it will be possible. But it's not possible now, and we are still not a real competitor for Silicon Valley.
That's a clear answer. And the follow-up question is from the whole full panel. From your perspective, I'm focused on Chris and Jan here. From your perspective, from HKTDCs and the Polish New Tech, what is the single most critical factor for CEE Fintech and Fintech Valley to be successful bridging to ASEAN countries? What is missing? What do we need to work most on? Let's focus on the important and not ignore, but downplay the less relevant parts.
I started earlier to kind of compare Hong Kong with the V4 region here. I think we are small in terms of our own economy, but we can be collectively very strong because it's a much bigger market size. It's even more kind of innovation and also understanding of the local or regional market. What I saw actually from the report, it was very interesting earlier, is that there are a few pain points or weaknesses in the region, including the funding. So apparently the startups may not be able to raise funds or to scale up because of that, and then the markets. So I think the two kind of key areas we may start working with each other through Hong Kong potentially could be in the areas of fundraising and also in the areas of market expansion. And in both areas, I think the HKTDC, which I represent, more than happy actually to support. We can connect to potential VCs or investors to interesting projects here. We can even, connect to potential clients or customers to start this kind of process. But I hope this is just the suggestions of how we can bridge from both sides.
Now, Jan.
So maybe what Simona just mentioned, so we need to make small steps to make it good, because it's not possible to make big Silicon Valley, to make a big bridge between ASEAN and CEE region in a month or 2 or 3 years. It's not possible. So definitely what we need to do is to focus on specific needs that every region have. Because we are different, we have different needs, and different startups will have success in every region. So definitely this is one of the things that is the most important, that we cannot help everybody. Let's be honest. So from my perspective, definitely this is one of the key points that we have to focus and identify who will have the biggest potential in the certain markets, and rethink how to make the financing for that companies. Especially that we need to understand that always they will say money is not enough, because this is the idea of a startup, that you are spending the money for the development, and think how to scale up on certain markets, because the markets are different. So even if this solution have the success in Poland or in the region, not necessarily the same business model will have the success in the ASEAN region, and opposite side. So we need to focus on that factors.
And where do we find the synergies between ASEAN and CEE in sandbox development, working together with regulation sandbox, technology sandbox, user experience, or where do we find the biggest synergies? Is it bilateral investments, knowledge exchange, joint AI, blockchain, or is it digital payments project? Because that's one thing we have in common. We all need payments. At least that we know for sure we need in common. So these are things that we have to consider seriously and think where are the biggest synergies and what are the lowest fruits to pick first. What is your opinion based on your knowledge from the industry and the different cultures? This question is open for anyone who wants to dive into it. We have just a few minutes left.
I think in every field we need to focus on cooperation, but I see, especially in the beginning, the biggest potential in knowledge sharing, because, for example, what I see that in general in the financial area, people are very thirsty about to know what's happening in Asia because it's harder to get information, so it's not easy to get the information in all cases, and to implement those techniques and innovations what are already working there. For example, like QR payments are very common in the region, and in Europe, so far there was kind of mild resistance to adopt this technology, and I feel that it's changing in the last 1-2 years. But on the other hand, they don't have the practices to use it properly or to use it to its full potential. So I think knowledge sharing is very, very critical, and it's the easiest way to start.
Leaves another to Chris. We talk about knowledge sharing when we want information and knowledge from Asia. So what does Asia know about us here in the CEE? Is that also a black hole, or?
Obviously not enough. I think that's why we talk about knowledge sharing. And I guess going back to my earlier notion about the mind setting, I think if an investor or if the collaboration from Asia side is to come to Europe, probably they would not directly think about Central Eastern Europe to start with, let's say so. Probably instead it's the traditional market in Western Europe, also including the UK, for example. So I think that mindset needs to change, and I think from us here, we need to showcase why they need to look into here. Because the valuation is more interesting, because of the collaborative effort right now that we're talking about, that could be a good story or a good kind of reminder for companies from Asia to think about this region as well. I think that's very important.
I see one advantage for the Visegrad 4 countries. The Visegrad 4 countries started fairly recently from nothing, and do not have any old legacy systems that are built into, like many Western European countries. Like somebody was mentioned, Germany have their German payment systems, Italy got their Italian payment systems, Denmark got theirs, Netherlands got theirs, and so on. We don't have these legacy systems here. So we're starting with a much cleaner sheet. So that's why it might be easier to foster innovation and adaptation here. Plus the fact that the Visegrad 4 have a higher percentage non-banked and underbanked people than, let's say, Western Europe. Last comment on that before we round off. Anyone?
So what you mentioned, it's good that we started in the 90s, everybody from the V4, because we had till 1989 almost nothing. So we started with a clean sheet, with a new technology that times, and we are developing still and still. So we see that in Poland that, for example, banks a few years ago even, they were not seen so easy to be used, for example, every day. Not every bank had, for example, application for your smartphone or something like that. Right now, every bank have it. We have additional services. It's, of course, still not maybe the same level of super apps like in the ASEAN region, but we see the development. And soon, maybe we will have the similarities with the ASEAN region, because they also didn't have the technology in the broad meaning. I'm not saying about the Hong Kong. I'm not saying about the Singapore and about these hubs, because they always were on the top. They had to for many years to be on the top. I'm saying about the whole region. So this is big potential for us to learn one from another and exchange these solutions and these tools. Because in the time that we are right now, it's much easier to connect new solutions, new tools in the existing businesses than it was even 10 years back.
I have a question from the audience here, which I think is really important. How do fintechs want to approach demographic change in an aging population in Europe and the Visegrad 4 CEE? I will just give you one anecdote. My father, he doesn't have a smartphone. And he doesn't have a computer. He doesn't want to have a smartphone. He doesn't want to have a computer. He's banked. What will we do with this kind of customers in the future, even the fintech development and new payment systems and so on? How will these people be able to pay their bills in the future? That's an open question for anyone.
I would reflect on that we have good practices, not necessarily in Central Europe, but if you look at, for example, the Netherlands, like ING has almost 100% penetrations, and Dutch people are not younger than here. So it means that I think education, customer focus can help significantly. So I don't think that it's a real problem in that sense that it's not hard to, it's impossible to solve. It needs a lot of attention and good strategies. So I think it's one obstacle what we will solve.
Okay, how will we solve it? That's the question. I will continue with my anecdote. When my father pays his bills once a month, he goes down to the local tobacco store, the Tabak, and he gives him the bills, and he gives cash and pay the store owner a fee for paying his bills for him. Because if you have to pay them through going to the bank, he pays around €1 per bill he wants to pay. If he goes to the tobacco store, he pays 50 cents in a fee per bill he wants to pay. So I'm just saying, this is an area where the fintech could have a great potential when it comes to payment systems. How can we get people to be able to pay their bills and deal with payments when you do not have a smartphone?
I mean, obviously, there's a reason why, I mean, the aged people don't want or cannot use these kind of solutions. I think it's education for sure. Also, I think, like you said, if they don't have an iPhone or they don't have a mobile phone, for example, I think that happens also in Africa. There is a way that people can actually get a device to make use of these kind of digital solutions. Another aspect is to look at probably the user interface. I think that's, we talk about the design. Perhaps if it is too complicated, they feel like, okay, I don't want to learn it. It's too complicated for me, so I stop there. But if there is an easier way to adapt and they find it, okay, interesting or easier to use it, that could be a way to look into potentially as a new business model. And then lastly is incentives. Perhaps incentives can also incentivize the use of these digital solutions. If it is cheaper in terms of the bill, if it is something that can help them, to get additional services, that can also be an idea just to think about.
Thank you. And we have to round off here. We're running out of time. I'm just going to check if we have any more questions from the audience. This question is for Alexander. How can you protect your investment in building fintech in SEA, considering local shareholding requirements and ever-changing licensing requirements? For example, for consumer lending in Indonesia.
Yeah, I think it's a more specific question which they can approach and we can discuss personally. I'm not ready now to give some technical details about that, but of course there are certain requirements by central bank and regulators about foreign ownership as well, and there are different structures. So I think it's a more specific question.
Thank you.
It could be addressed with legal expertise. Yes.
Thank you. I agree. You have to talk to legal expertise here, and it will be irresponsible to give a too specific answer. I would like very much to thank our panel for the flagship panel. Thank you so much, Simona, Chris, Andras, Jan, and where do I have your name? David. There you go. Sorry about that. And we should not forget to thank everybody who made this possible, thanking the audience for the interesting questions.